I love the fact that in listening to last week's show, you guys were talking about the fact that all the improvement from that rate cut was already in mortgage rates, and that was 100% correct. So in reality, if you're looking at the action that happened today in the markets, basically nothing happened.
This is Las Vegas Real Estate Now with local real estate expert Harvey Blankfeld.
So the Fed did in fact cut their rate, but because that was 100% anticipated and planned for by the markets, they said, for sure, the Fed's going to cut this time, and they do. So we got exactly what we expected. So nothing changed.
So mortgage rates and bonds were not affected today.
Not so much,
right.
At least, and certainly if you look at the actual minute by minute timing, the Fed announces and the bond market doesn't move at all because we'd already had that.
They anticipated that move.
Right. So we're looking farther into the future than just one day.
Right.
What we saw was interesting is as trading continued through the hours, Jerome Powell got up to do his press conference, talked to reporters about what he had done, and in that conversation, we actually saw the markets move slightly worse.
Oh.
Okay. Not dramatically so, but giving a little bit of the gain back, which is very sort of really normal behavior if you're looking at it on a day-by-day basis, the way mortgage bonds and other treasury securities and stuff get traded. It was a very minor move. So,
Gotcha.
So all good things. We've seen interest rates now at this point decline dramatically. If you go back to January 1, where you were easily getting a 7-something,
right,
and now you're in the very low 6s. Some people are in the mid 5s.
Okay.
on rates and stuff. It's much better days when it comes to borrowing money.
Yep. Nice.
Than where we started the year. So significant improvement. It's interesting. I was talking to another realtor a little earlier, and we were
wait. You were talking to another realtor.
Yeah.
All right.
Hey, no one put a ring on it.
Back to home warranties.
All right.
No, and he was asking about. He asked what I thought was a good question: is there more improvement ahead?
Right.
And one of the things I put into context for him is my personal filter at this moment says we've gotten the largest part of the move already as of now. There is maybe a bit more improvement coming forward as the Fed does another rate cut, which is the majority of the board did predict at least one more rate decrease before the year end, probably December, I'm guessing.
Right.
They'll do another rate cut, but there's less improvement ahead through the end of the year than we've already received.
Yeah.
Okay.
We've gotten the bulk of it, which is good. Yeah. I want the better part of the deal now.
And what is the rate right now? It's like 4 something?
It's 4 to 4.25 at this moment.
Okay.
And so that's 0.25% lower than where they were yesterday.
And that's 4 something higher than it was during the pandemic.
Yeah.
It was nothing. It was zilch.
Yeah. I'll continue to encourage people, if you're really trying to track the direction of where rates are going, track the 10-year Treasury note.
Okay.
And that is really close to 4.0 at this point, which is far better than what it was. And that's what most closely mortgages will track.
I got you.
They move in the same direction for the majority of the year.
Now, historically, you and I used to talk before the pandemic. We used to talk about the idea that the Fed rate has no impact on mortgages at all. Of course,
no direct impact.
No direct impact.
Yeah.
And yet of late, they've been married together so much more because it has had, I think, it has had more impact. Just because people are more in tune with it, maybe, or more attuned to the idea that it's having some impact.
I would make the pitch that because people are paying so much more attention to it, and whether the Fed's going to wear no socks this day or wear socks this day, right? That the kind of minutia is influencing. But in general, if you look at historical terms, the direction that the Fed funds rate is going is usually the direction that mortgage rates are going.
Okay.
They just don't move in lockstep 1 for 1 or anything like that.
That makes sense. Okay.
Yeah.
Now let me ask you, just what if?
Okay.
A quick little what if.
Yeah.
What if it had gone a half?
Oh, that would have been more than the market had anticipated, more than we have priced in, and you would have seen mortgage rates improve through the day. Likely tomorrow's morning's interest rate, when they come out for me, would have been lower than where they are today.
Got
in that
it.
case,
Okay. Yeah.
Because we had not expected that.
Gotcha.
And now reverse it. If the Fed had done nothing today, we would have seen interest rates jump. Because of
Right.
Right.
And because we got less than we expected, and that's not a good thing.
So we have 2 more meetings before the end of the year?
November and December.
Okay, so your thinking is maybe they might do 1 more in December. So as we approach November, their anticipation will be there's probably not going to be a move at that point. And so what I want people prepared for is the idea that lenders, mortgage companies are looking at that bond rate and they're anticipating what changes they think may happen. And the Fed is not, they're not cute about this. They're not trying to be coy. They're pretty much letting you know what's going to happen. They're not trying to hide
this
it.
Federal Reserve is very much in the plan of, we like to let the market know what we're going to do before we do it.
Right.
Like they hint, they leak to certain members of the news media, this sort of thing. They don't like to surprise the markets.
Right.
And that's generally, I think, good tactics. You don't want
Agreed.
Yep.
because you could get whipsawed if they
Indeed.
were out there surprising us on a regular basis.
Yeah, and in the past when they weren't doing that, then maybe you would have seen rates move much more be affected much more when the actual announcement came, as opposed to now when we're getting these
very,
lead-ins.
Very true.